larger point, though, is that we're not on a preset path and that we will be guided by the incoming data and the evolving outlook. It's, certainly conducted under Vice Chair Barr's leadership with input from the staff and, discussions with governors on that committee. And I'm kept broadly apprised about what's going on. But the bottom line is nothing has been proposed to the board. Nothing has been formalized at this point. It's a lot of work that's going on. I think discussions are going on, meetings with industry and that kind of thing. When we get to the place where that's appropriate, the board will be carefully briefed. Ultimately, we'll vote on a proposal. We have no role and seek no role in what is really at the heart of fiscal policy, except I will limit myself to the two things that other Fed chairs have said about this. One is just that Congress raising the debt ceiling is really the only alternative. There are no rabbits in hats to be pulled out on this. Two really is just that no one should assume that the Fed can protect the economy from the non-payment of the government's bills, let alone a debt default or something of that nature, which we don't think will happen here, but no one should be thinking that we have the tools to protect the economy from all the potential effects of that.
Well, Fed Chair Jerome Powell reaffirming that they would need to hike rates further, but said that would all depend on the incoming data and that no decision has been made yet on the pace of rate hikes. Warned that inflation remains very high. 2%, he says, will remain the long-term goal. And that's pretty much a reiteration of what he said yesterday as well. Fortunately, though, the equity markets are not reacting as sharply as they did, day before night. It's at best just a very, very tempered mood. But suffice to say that a high interest rate regime is something that the markets will have to deal with, at least when it comes to U.S. equities.
Yeah, he did not sharply pinpoint that, but
it's a hawkish tone, regardless.
It's a hawkish tone. Yeah. He was not explicit, but you can imply from his tone and tonality that where rates are heading. I guess markets reacted to this kind of a narrative a week before, which is that in the run-up to the Fed commentary, US markets had already corrected. The 10-year paper had already marched up to 3.9 or about 4%, and the dollar index had gone up from 103 to 105. So frankly, from a market standpoint, this is not new, and the market reaction is something which already got adjusted. I will not read too much into it, with the exception that if the bond yields in the near term, if they start moving higher and if they go dangerously higher above 4% or dollar index starts moving towards 110, I don't think from a market standpoint this is something which would be an incremental worry. Interest rates will remain high. Interest rates will remain high for long. That factor, I think, is something which markets are already aware of, and large part of price adjustment is behind us. What it also does is that it really limits the upside. I mean, if interest rates are high, then that means whatever surprise markets were anticipating in the second half of the year, that gets diluted. So that is a problem, if you ask me.
Yeah, for our markets as well, though, while we are finding support at the crucial levels around 17,800 odd, having said that, we are definitely trading at the higher end of the trading range. Having said that, yesterday it was a steep recovery that our market saw. Even though we started off on a ghastly set of global cues, you did see a very, very smart recovery from the session lows. In fact, we turned out to be the region outperformers of sorts. Good recovery in the Adani names, good recovery in some of the select banking names as well. And FIIs, by the way, were big buyers yesterday, couple of block deals there as well. But we were in excess of 16,000 crore rupees. That's the quantum of FII buying that one has seen month to date. Of course, it's also been led by large block deals that have happened. So we're managing to hold on to that budget day low and clearly escaping that at 17,350 thereabouts.
So Aisha, you put all those four factors together, you could ask yourself, okay, do we have a bottom in place? Looks like we have, at least for a Nifty watcher. B, large part of the sentimental rub-off which had happened largely because of Adani group of stocks, at least for Adani group of stocks and also for lenders and for the banking sector per se, that clearly is on the back burner now. And C, in patches, but I guess the directional move of FIs now is on the positive side rather than on the negative side. So after a very lull start to 2023, our markets rediscovering their mojo. B, Are we in for a gradual rise, but directionally are we headed higher? Second. And B, if markets in a sense are going to be directionally positive. Now you may not see a straight line move, but directionally and incrementally, if you're trading with the positive bias, are we likely to go back to a outperformance in small and mid cap stocks? And if that's not enough, I guess Bank Nifty, which in a sense is a pivot for me, it's not going to be IT, it's not going to be metals, that pivot index is also outperforming. So based on the factors what we discuss, you got to ask yourself is what is a trade? I think it's a long trade. You got to ask yourself is that what is the bias? The bias is positive. Give this market some more days, and if you stay where you are, and even if you stay moving in around a narrow band with a positive bias, then the market outlook suddenly will start looking different, because markets will start talking about FY24, they'll start talking about next earning season, they'll start talking about a consolidation which has happened, because you are in March, and exactly 4 weeks from now, we will be talking about Q4 earning season and FY24 outlook. So that narrative changes.
Yeah, and the triggers are going to be largely the focus on local cues, as you're talking about, that we'll be flagging off. So as of now, Nikunj, you're saying the strategy for the long term is to stay invested, to remain quite patient. Would that hold true even when it comes to investments within the broader markets, the mid and the small caps?
I think you will see outperformance. For example, sugar yesterday.
Yeah.
I mean, out of the blue, it's a what is sugar? Sugar as a sector is patronized by traders. It's a sector which is patronized by HNI investors. Now, nothing has changed. I mean, sugar prices were at a 7-year high, but they were at a 7-year high 10 days ago also. So why have we seen this kind of an sudden sugar rush, if I may use the word, for sugar stocks? And that's largely because markets took notice of that. You start taking notice of positive things where the market is in a positive frame of mind, and when you are ready to take a risk. So are markets, are traders now ready to take a risk? If yes, then you may see pockets of outperformance which will start happening in mid and small cap stocks. So for example, in the second half of trade yesterday, you saw all the fintech and consumer stocks made a comeback. Sugar I've already mentioned. So I think that really should be the hunting ground now. If markets trade the way they've traded for next couple of days, then you will see these large pockets which are dominated by mid and small cap stocks suddenly getting noticed on everyone's radar.
Okay, in fact, here's a word coming in from Ramdev Agrawal as well of Motilal Oswal Financial Services, who believes that some of the new age tech companies will make it big in the future. So he's definitely betting big on that pocket seeing a recovery. He also says that some of the class of 21 companies can be very successful in the future.
A class of 21 companies which went public between 2021 and 2022.
Some of them will definitely make it.
You think some of them could make it big?
Sure, because that hype is busted now. There's no more hype. Last year, we were in November, December last year, there was a lot of hype, crazy kind of valuation. And so those things are gone. 60-70% corrections happen now. Can it correct another 23%? That you cannot take it away. But now the promoters have also come to the senses. They also want to make profit. They want to make profit very quickly. And in any case, they want to make large profits. So some of them will be very successful. And some of the companies are very unique. I mean, there are no Me Too companies in that particular segment. So I think if there is a profit pool, if the consumer behavior has changed in some of the companies, clearly digital empowered companies are the companies where you can see few 1 lakh crore, 5 lakh crores companies coming in very quickly. I mean, if at all it has to happen, it will happen very fast. Otherwise, they'll just fall by the wayside.
All right, now are we in for a decent day, and rest of the March is going to be the one which will be dominated by the bulls. Naresh, of narrative, the narrative certainly seems to be constructive. Nifty has found support at important levels. You've got Adani group of stocks which are stable now. Banks are making a comeback. Do you think rather than an absolute mood on the Nifty, we should now focus on the tone and tonality of the market, which seems to be more constructive?
Absolutely. So the view is right now we are at, say, in the middle of the range. So we know there is a base at 17,200 to 17,400 mark. We know there is a stiff resistance at 18,000 to 18,200, and which is not very far away from the current prices. But in this period of time, we are seeing a lot of stock-specific outperformance. We are seeing one by one different sectors do well. So, for example, the public sector enterprises index has hit a new 52-week high. It's crossing 5 to 7 years of previous price points. 2014 highs are being crossed. So there is a clear shift towards that. In terms of, say, banking, we are now seeing more NBFCs do well instead of banking. So now is the time where you start being more stock specific, because say if you're in the 2 to 3% range on the Nifty, and say if you have an upside of say 2 to 3% from here, it's very difficult to make a trending trade going forward unless we start breaking out, or we see the global markets also breaking out. And in this period of time, it makes more sense to go for stock specific moves. And we are seeing that happen across the mid cap and the small cap space also. So there are stock specific opportunities, and that is where one can be focused on rather than looking at the index in this range bound move.
Okay, let's get stock specific then, Naresh. In light of the way we did manage to stage a pull back yesterday, the fact that the mid cap index as well was up about 0.5%, what would be your stock specific strategy?
So continuing to like the power space, that is one more. So that is where I'll go with Tata Power. The stock, after making that move from 60 to 80 levels in 2020-21, the stock has consolidated really well. It's made 7 to 10 bottoms around the 190 to 200 mark. Over the last few months, it has a resistance around the 210 to 215 mark. And the stock has come very close to that over the last few sessions. So if that breaks out, we can see a quick move towards 240. The risk reward is very interesting with a stop loss at 205. Second is a buy on L&T Finance holding, which has gone through a 1.5 year period of consolidation. The stock has started making higher bottoms, where the base keeps on shifting from 75 to 85. And now going forward, it could be 88, 90 as the base. And 96 to 98 has been a resistance, which has been again tested multiple times over the last 1.5 years. If that breaks out, we could be starting a bigger move here. So preempting that breakout, I expect it to break out over the short term. A buy at current level makes it a better risk reward in the preemptive stage. A stop loss at 88 and an initial target price of 105, but could be much bigger once the breakout plays out.
Right, okay, let's welcome on board Kunal as well. Kunal, hi, good morning. Not bad at all. In the last 5 days, we've managed to eke out almost over 2% gain on the index.
Yeah, over 2%. On the Bank Nifty, the picture is a bit different. In fact, much more positive. From 40,000 odd levels, we've come back towards 41,500. So almost a 4% kind of a recovery for the Bank Nifty. I think that's the index to watch out for. Even in fact, I was looking at the data for the last 5-6 days, start of this March series, March expiry. And there's been a dramatic change in open interest for the Bank Nifty. From an average of 26 lakh contracts, we've now gone down to almost 22.5 lakh contracts on the Bank Nifty, which means that there's been a sharp reduction of almost 3.5 to 4 lakh open interest on the Bank Nifty futures. On the Nifty, however, the open interest is still at 1 lakh, 5,000 contracts broadly, which means that there's hardly been any major reduction in the open interest for the Nifty, and that would probably indicate that there could be more unwinding of short positions on the Nifty futures. And I think the Bank Nifty could remain into a bit of a consolidation at a higher range. So my sense is that for the next couple of days, it's a bit better to try and trade on the Nifty, because the chances of a breakout as well as a short covering is far more higher as compared to the Bank Nifty.
Well, yeah, the Nifty Bank itself has put on about 2.1% in the last 5 days, with the Nifty eking out a gain of 2.25%. And this compared to the S&P 500 index, we've clearly managed to outperform the US index, which has gained less than 1.5%. In fact, Kunal was just talking about banks. Look at SBI's price action in the last 5 days, 8% uptick coming in. IndusInd Bank has put on a good show, about almost a 9% move. Of course, a large chunk of the move on IndusInd Bank happened yesterday, when this was one of the top movers with almost a 4.5% odd kind of gain. But Kunal, in terms of individual stocks, what would you recommend?
So more from the mid-cap market bet, two buy calls over there. First one is a buy on GNFC. That stock yesterday gave a classical breakout about that 550, 555 mark. It was a huge resistance for GNFC because the stock was trying to scale past about this level for the last 1 month with multiple attempts. But yesterday is where the stock finally managed to break past about those levels. So that's a buy. Targets could be kept at 600 broadly. Short-term and probably medium-term targets could be revised to almost 625 on the upside for GNFC. Stop loss could be kept at 550 levels. And the second would be a buy on AV Capital. Yet again, the stock making a fresh intraday as well as a short-term swing high, breaking past about 157, 57.5 levels on the spot basis. So that's also a buy. Targets of 167. And traders who are looking at a fresh buy at current levels could keep a stop loss of 154.
Okay, there you have it, your top technical strategies done for the day. But let's listen in to what Devina Mehra had to say of First Global. She says that her fund doesn't have any exposure to Adani Group stocks, but continues to remain a bullish on banks and believes that we'll continue to look at that space closely.
Yeah, so I mean, we follow an artificial intelligence and machine learning system as our base. So that system has rarely liked the Adani Group, barring the cement stocks at times. So I think we did hold Adani ports also for a short time in the middle. So as part of our risk management system and the fact that in terms of financials, it was very difficult to justify the valuations. The most of the other Adani names we have never bought, and we still don't hold those. As far as the banks are concerned, we after being very negative and with very low weight in banks, right, from 2020, 2021, and from the middle of 2022, we went market weight in banks, which because of price movement then became somewhat overweight. And even when, even before the Adani Group had recovered, I was on TV and I had said that, the reaction on the PSU banks and banking in general seems to be overdone because it had affected even banks which had no exposure to the group. So we have continued to hold the banks, and we still continue to hold them. So that I think was a more of a temporary issue for the banking sector. I don't see an imminent danger from this angle. Of course, I mean, in banking, negative surprises hide somewhere or the other and may come out at some stage. But at the moment, we continue to be reasonably positive on banks.
Welcome back. The US markets have closed mixed, largely with a downward bias. Asia as well is looking a little bit flip-floppy as investors are clearly digesting that commentary coming in from Fed Chair Jerome Powell. The SGX Nifty, there you have it, indicating a bit of a downward bias this morning. But let's focus in on top market voices. And Ajay Srivastav, he is bullish on the power sector and also remains pretty positive on consumer stocks. Varun Beverages, according to him, stands out. Listen in.
Power is the sector we are quite bullish on. Generally speaking, it's had a bad year at this point of time, but come summers, come this year, the Government Electricity Act, if it sees the light of the day, is going to be a great boon for power companies. No competition. If pass-through cost comes through, they're going to reap a huge amount of benefit to it. So power is a sector we're quite bullish on. So if you take a good company like, say, Varun Beverage, I'm not saying recommend it. It's not a reasonable P. It's a high P stock. It may still show growth, still give you income, but it's a high-risk venture. You saw what happened with liquor companies. They had the best quarter, but the stocks did not perform of poor management. So just because industry is good, you had so many weddings, so many hotels opening up, the liquor stocks did not perform. They were poor managed companies. So, divorce yourself to the fact that economy can be very good, markets can be very good, but never underestimate bad management. India Inc. is full of bad management companies at this point of time who are not rewarding their shareholders given what's happened to the economy last year. So I would still say on the side of this that, listen, do not try to invest your money too much, go spend it. But having said that, power, I said only one thing. Pass-through pricing is the key to fortunes of power companies. If the government has the gumption before election year to keep on going on that path of allowing Electricity Act pass-through pricing, it's a great boon. It may happen this year, may happen post-elections, but eventually people will have to pay for power and you have a monopoly situation. You can't get new companies to come in. Three companies control almost 80% of power in this country, supply in this country. You can't go wrong in that. You may go wrong on timing, but you can't go wrong on fundamentals.
Okay, let's talk stocks and all that's going to be in focus this morning. And data patterns, it's going to be opening its QIP today. The company may offer a 5% discount from the issue price is what we understand. Sharad joins in with details of data patterns QIP. Sharad?
Well, yes, in focus we'll have data patterns. Last night the QIP issue had opened and the deals will be finalized on the March 13th itself. Now the issue price is coming in at almost 1285 rupees per share, which indicates a 1% discount to the current market prices. Now this could lead to an equity dilution of almost 7% on an expanded capital base, and the promoter stake could fall by almost 3% from the current 46%. This will come into almost 43%. Now the key commentaries in the third quarter of FY23 actually mentioned that the company would be willing to raise almost up to 500 crore rupees via equity offerings, and also they had stated that the fund will be utilized for net working capital, capex, and to test the infra for the next 3 to 5 years. Apart from this, of course, the company intends to fund the expansion to internal accruals as well. And in the management commentary, they have also stated that the large orders would be covering the cost of setting up the project itself. But now let's look at the key important domestic institutions holding stake in the company, and which includes Axis Mutual Fund and IIFL Mutual Fund holding almost 1.3% stake apiece. And apart from this, the mutual funds are holding 5.61% stake in the company. Even insurance major AIA, Tata Life Insurance has also almost, you can say, 1.6% stake in the company. And apart from this, let's look at the key triggers going ahead for the company. And of course, a strong, healthy order book comes of almost 2,000 to 3,000 odd crore rupees. And also, defense electrics is something which will actually give them almost a 1.5 lakh crore market potential to tap into. Apart from this, also orders coming in from BrahMos missile, ground platform orders as actually important for FY24. And lastly, of course, the company would be a key beneficiary of indigenization of raw material components.
Thanks very much, Sharad, for giving us those details. Moving right on then, let's get you an ET Now exclusive. Well, sources tell ET Now that Clear Wealth Consultancy will be selling stake in Gokuldas Exports via a block deal. Let's take it across then to my colleague Pankaj. He joins in with all the exclusive details. Pankaj, what about the pricing and what else are you picking up?
So it's really this season of block deals that has come back in the market. Yesterday it was Kirloskar, Shriram Group and a few others in the last few days. And then you now have data patterns coming up with a QIP. And this morning, Gokuldas Export has seen a big deal opening in. Now, it's not a big deal in terms of value amount. It's just a 200 crore deal on a base size, 240 crores on the higher side. And as you mentioned, Clear Wealth Consultants, which owns about 20% stake, is something which is going ahead and selling this particular stake on the higher base. So including the green shoe option, they will be selling close to about 9 to 10% stake in the company. They are offering a 4% discount. 390 rupees is the price that essentially they are offering to their clients. And then when we come down and look, JM is the sole banker. What I could also pick up is that the demand is decent, and they expect a mix of FIIs and DIIs to come ahead and subscribe to this particular name. So it's a big deal in terms of percentage stake that they are selling, not in an absolute amount. JM is the sole banker. Mix of DIIs and FIIs is what is likely to subscribe for Gokuldas Export.
Okay, that's another stock which is going to be in focus. And time now for some key fundamental ideas for the day. This time around, from Hemang Jani from Motilal Oswal, he believes that utility and power stocks are quite the interesting space to look at.
Utility stocks have remained relatively better off in the last few months. And if you see the volume data points and the tariff part, there is a fair bit of stability. So we do think that, names like NTPC, Power Grid are the ones which will provide some sort of a stability with a good dividend yield for those who are, looking for a low risk ideas. At the same time, some of the companies which are providing the equipments to some of these utility companies, on the capex side, I think that is the only segment which is showing a lot of strength, and the order inflow for them continues as the capex cycle is moving. So I think we should focus upon capex. So the names like ABB, Siemens, Larsen, and also some of the power utilities in an environment where there is a slowdown and the overall market may not show much of resilience.
All right, let's move on then and take a look at the February data of the Indian life insurance space, where companies have reported a muted 10% year-on-year growth in the retail APE. Let's understand it company specific and get Vinny, who joins in with all the details and the numbers. Vinny, how's the month of February fared?
Absolutely. This is the data that we're getting in from the Indian life insurance industry. Muted growth of around 10% that is coming on a year-on-year basis on their retail APE growth for the month of February. Now, when you look at it in terms of the public players as well as the private players, very divergent numbers that are coming in over there. Overall, when you look at it, in terms of private sector, we're seeing a growth of 18.2%, while LIC, the retail APE growth is seeing a decline of 3% on a year-on-year basis. So, look at the difference. While private players saw a growth, we saw that the public player, LIC, actually saw a decline coming in over there. Now, in terms of the divergent growth trend for the month versus for LIC is something that we're watching out for as well. Other than that, the pre-booking for high ticket and non-linked LIC led to the ticket size expansion, and policy continues to see strong decline. This is especially coming in because of the proposed taxation changes that have been made by the union in the union budget of FY24. So obviously because of that, we are seeing some pre-booking coming in for the higher ticket size as well. Now, among the listed players, HDFC Life reported a good set of numbers, while ticket size increase was something that helped ICICI Prudential Life as well as Max Life as well. So overall, in terms of the listed player, HDFC Life saw a strong growth of 27% and a ticket size growth of around 19% coming in there, while ICICI Prudential Life saw a growth of 10% on a year-on-year basis. Keep an eye out on this insurance data that we are coming in, divergent data of versus when you compare private versus public players.
All right. Hemang, the entire life insurance space, if you frankly ask me, Hemang's not there? Okay. Kunal, where is LIC headed? Yes, no, yes, no. It's been just one of those stocks where every time we think it's going to go higher, it comes down.
Yeah, it comes down, and there's hardly any major sign of trend for LIC. The stock has at least shown, just one good thing about the chart is that the stock has formed a major bottom at the 550, 580 odd mark, 575, I think if I'm not wrong. That was the low the stock had made. So, and when I look at it relatively from the Jan lows towards Feb lows, the stock has just shown a sign of bullish RSI divergence, where even though the prices have made a new low for itself on a relative basis, but the RSI has actually made a higher low. But then that's point number one, that the stock has formed a major bottom for itself. Now, does it effectively result into a stock going into a V-shaped recovery? That's a trend which we've not seen for LIC as of now. The stock has gone through very slow and a steady kind of an uptick from those 575 levels. But the fact that the stock is not holding on to the hard levels of 610, 620 mark, that's a point of concern for LIC. So my sense, I think it's always better to try and wait out for a confirmation into these kind of names. Let the stocks break past about the first strong set of resistance zone. Then only I think it makes sense to try and chip into these stocks. So maybe at 640, 645 levels, there could be a first level of confirmation to buy LIC.
Okay. I'm just going to, shift gears and go back to the sugar space again, because the entire sugar space yesterday did see a very strong sugar rush. Nuresh, has anything changed on the chart based on yesterday's price action, which is suddenly making these sugar stocks jump so high?
So the case actually has been that the sugar spot prices actually made a breakout, and that move has led to some buying happening in the whole sugar space. So it's not related purely to the sugar output, etc., which you would expect, and that is where eventually the momentum could continue. But sugar prices breaking out has been the trigger for the sugar stocks making a move. And there has been good volumes yesterday. The delivery volumes was not as great as one would have expected. But overall, the shape is this. If you look at the chart, say I would go with the chart of Balrampur Chini, which will give us the structure of the stock. So the stock topped out in 2021 around 350 levels. Then it made another move towards 520. And since then, the stock corrected all the way to 340 levels. And for the last almost a year, it's been in a very tight range, say from 330 to 420. Now, what is interesting out here is earlier when the cycle would top out, most of these sugar prices would fall, sugar stocks would fall 50, 60, 70%, which has not happened this time. The corrections have been 25 to 35% in most cases. which tells you that deep cyclicality of the sector has gone off. Because if you look at the last 15 years of data, we've seen that happen every time the stocks go up 5x, they end up falling 50-70%. So now a new base has been created. And now are we starting a new leg? Very much yes. That is the possibility which the chart structure tells us. So the recent highs are around 420. Once we start crossing 420, that would be a clear indication a new cycle is starting for the sugar space. So like the whole sugar space, yesterday's move could see a little bit of a fade off today, and that would be the time to accumulate over the next few sessions.
All of those stocks were abuzz in yesterday's trading session. But let's move right on then and analyze some data when it comes to the trends for FII flows. Because FII flows have remained negative in the first half of February. Financials, interestingly, has seen the largest outflows, but it's been FMCG that's seen some small inflows coming in. Let's analyze that data then. Samit joins in with the details. Samit?
Well, if you see for the second half of second half of the month of February 2023, the outflows were only 57 million US dollars. However, so far for the calendar year 2023, if you see, the outflows have been to the tune of close to $4.7 billion. Now, financial service and energy sector, these are the two sectors which are worth mentioning because it has been a tale of two halves in the month of Feb for both these sectors. Now, in the first half of Feb, if you see, financial service had seen the highest inflow, highest foreign inflow, while energy sector had seen the highest foreign outflow, which was also on account of the Adani Group stocks. But in the second half of Feb 2023, if you see, financial service, the table has turned for financial service with the highest amount of outflows seen in that sector, while energy sector seeing a meaningful inflow of close to 156 million US dollars. In fact, the inflow in the energy sector was for the first time in the last 6 quarters. Previously, in the last 5 times, if you see, there was an outflow. And so far in the last 6 months, if you see, the energy sector has seen an outflow of close to 2.1 billion US dollars. Other than this, software and service sector saw a small outflow of close to 86 million US dollars, and during this time period, the Nifty IT index was down by around 4%. In the inflow side, commercial and professional service sector saw an inflow, largest inflow of close to 261 million US dollars, followed by the capital goods sector, which saw an inflow of close to 179 million US dollars. Now, another factor worth mentioning about the cap goods sector is the fact that the FI stance on the cap goods sector has now turned overweight from an underweight stance that we had seen, and this stance has changed in the last 2 months. In fact, in the last 6 months, the investments that FIs have poured into the capital goods sector has stood at close to 2.6 billion US dollars.
Samit, for giving us those details. In the meantime, today you've got a fresh brokerage note coming out on Asian Paints. Macquarie has maintained an outperform, a 3,600 rupee target price, saying that you've got the demand commentary, which looks positive. The peer trend as well is looking quite healthy. That's this week's chart. It's been a gain of about 1%. Yesterday, I recall, Kunal, you had a sell rating on Asian Paints. So are you indicating that even at the current levels, it's looking weak?
Yeah, it's looking a bit overbought or overstretched on the short-term charts. In fact, yesterday also the stock was down some, 0.5% to 1%. It managed to come back towards 28-25 odd mark. So my targets were just about closer to 28-20 levels for Asian Paints. And the only sense of belief for the charts was that the levels of 28-90 odd levels where the stock had hit day before yesterday, those levels are a bit overstretched. The indicators were on the much higher side on the intraday charts, and that generally doesn't bode well for stocks to try and sustain the uptrend. So either these stocks go into a time-wise correction or there is an immediate price correction like what we saw yesterday for Asian Paints.
All right, that's the view coming in on Asian Paints on the charts. Meanwhile, in yesterday's trading session on the Nifty 500, you had some stocks that clearly bucked the general trend. Indus Star, for instance, lost out about 3.5%. There was IRB Infra that was a bit of a loser. CG Consumer, Mahindra CIE, those were some of the stocks that were rather tempered. Any trends, Kunal?
So I think IRB Infra is something which I've particularly liked, specifically when the stock was pre the special situations, around this 265-70 mark, so which means price adjusted towards 26 and a half odd levels for IRB Infra. CG Consumers, on the other hand, the stock has been going through a bit of a rally pickup, but then there's no major price trends for CG Consumers over the more broader to medium term. So I would probably skip that stock, but I think IRB Infra is something which I would particularly look out for in terms of trade. In case if the stock happens to come back towards that 27 and a half odd levels, that's, I think, a very good zone to try and buy the stock.
Let's revisit some views from Rajiv Jain. And here's a very interesting view on why he's bought into PSU banks. And I specifically asked him a question on State Bank of India and a specific question on why he's avoiding into IT. We've heard his view on IT, we've heard his view on Adani. So let's hear out a few thoughts on SBI and why is he avoiding IT.
If you were sitting here in 2005, SBI used to trade at 15-20% premium for foreigners. Foreigners couldn't buy at the market, by the way, right? So like everything else in markets, that is the sentiment is cyclical, and I think in our opinion it'll change. But the good news is the way we think about it is that our job is to get earnings growth and the dividend combination right. If the valuations increase, that's wonderful. But even if they don't increase, we should be able to compound at double digits. So that's how we think about it. So we don't wait and hope for others to agree with our view. Maybe they never agree. But in the meantime, the earnings growth plus dividend gets us to double digits. We are happy owners.
Ajit always insisted that market price is a function of EPS into PE. PE is perception, EPS is growth. In Indian market, where do you think there is scope for P expansion as well as EPS expansion, and where do you think there is scope of only EPS expansion and no P expansion?
Yeah, I think the second bucket you'll get the companies like Nestle or this world. I think these companies will continue to deliver, but Nestle, I don't know, 70, 75 times, something like that earnings. I've kind of lost track. And Nestle, as you know, was a large position for a long time. So could they be derated as the earnings growth shifts away to other areas? Because you have to look at one aspect. Over the last decade or so, globally, earnings growth was on a slower side. So a lot of these defensive type businesses were re-rated because investors look for growth, including us, right? So growth was scarce. Now, and interest rates were low. So you got a bubble in tech, not so much in India, but elsewhere.
Bhasin joins us now. Let's connect with him and let's say hello to him. Bhasin Saab, good morning. How was Holi?
Yeah, good morning, Nikunj. Holi was, we didn't celebrate because you celebrated it on 7th and it was there yesterday and I was in office, the only person in office. What to do? I had to manage the volatility rather than play with color.
So what kept you busy yesterday? You were buying more for your clients or selling more for your clients? और कल तो मुंह मीठा भी हो गया, देखिए sugar stocks were up.
Sir, मुंह मीठा तो होएगा अगले हफ्ते 18,000. इसी दिन पे you call me on 16th, we'll be at 18,000. That's the confidence I have.
Okay, 18,000 on the Nifty. So what will take the markets to 18,000? Which combination of stocks?
Well, you've seen banks lead from the front. I think IT will join in and some of the metals. I think the dollar has topped out. This is a pullback rally. Whatever number comes on the 13th, 14th will be much lower than what was expected. And the Fed's credibility being notwithstanding, I think we weathered most of the storms. Now is the time for outperformance. I was just hearing your video. I think an excellent coverage you did with Mr. Rajiv Jain on what about the Adani group and his putting into money. So I think this is the time to be more brave rather than fearful because we think the best of India is yet to come.
Okay, fair enough. So you continue to remain that pretty optimistic long-term bull, it seems, Sanjeev. Let's discuss then what happened yesterday when it came to the entire auto space, because that as a sector did manage to lift the overall index as well. Bajaj Auto, M&M, Eicher Motors, Maruti. Which is your pick?
Yeah, good morning. So, Avan, if you remember in December, you had asked me my New Year picks and top of the line was Bosch. And I continue to see Bosch has hit new highs, by the way, 22,000 is coming. You can add a Motherson Sumi on the OEMs. And I think Eicher and Maruti will lead from the front. You rightly said Bajaj is a very, very big outperformer along with Mahindra. But I think some of the OEMs can outperform from here. Two more of my picks, if you remember, for New Year were Canfin Home, which again was an outperformer, and Tech Mahindra, which I think can be a dark horse in the large cap IT basket. So auto, IT, metals, banks, the whole basket is looking very, very good for the upside. But Bosch and Motherson stand out along with Eicher.
It is. You continue to bet on that stock and keep an eye out on Bosch for the long haul. What about the kind of moves that we've seen in the IT space? Do you believe that you know, given the fact that we have the latest news as well, a report coming in from Citi, they've got a sell rating on a large cap like TCS. What's your sense when it comes to large cap IT stocks? Which side of the fence are you?
So I am rather optimistic, and if you recall, about 3 months back, JP Morgan came out with a downgrade. I don't want to name names, but that was the bottom of the market, 18% rally most of the IT stocks. Yes, the bellwethers will be under pressure because of the hike in rates in the US, but I think all that is in the price. The language from some of the IT majors has been extremely positive. Artificial intelligence and cloud computing is on the way. So my top pick there is Tech Mahindra, and one of my outperformers has been Persistent. I continue to think Tech Mahindra is headed to 1250, and Persistent can head all the way up to 7,000.
We spoke about Zomato, I think, last, and that was before Diwali or before Christmas, just in and around Christmas. You said you like Zomato. Now, this is one consumer tech stock which has not really participated in the comeback rally. It was around 60 rupees in December. It is now at 54.55. While Paytm, Policy Bazaar, all of them have made a comeback. Why is that?
So see, the problem is there are some long-term investors who may have encashed what they want. But Nikunj, don't look at this quarter on quarter. I can tell you Zomato's business is roaring. Just yesterday, my son had as you know, he runs a restaurant. He had the largest delivery orders on Holy Day. I'm just giving you an anecdote that yesterday everyone was ordering from home. It was the highest number he has ever recorded in the last 1 year. And most of the credit goes to Zomato. Zomato makes 30% commission online just sitting there. So I think this is a very, very long-term story. And even if it triples from here, it will be cheap. Given the advent of doing away with household labor and getting the food of your choice, there may be some margin pressures, but I think Zomato is a long-term story. Don't track it quarter and quarter. You can add the same to Paytm once the overhang of SoftBank goes away. I think both these stocks can make a lot of money if you are willing to sit the next 2-3 years.
All right, that's the view coming in on New Age Tech. Sanjeev Bhasin sharing his views. Meanwhile, just mapping out yesterday then, and you had the broader markets that did manage to scale up about 0.5%. It was PSE that was gaining quite a bit of traction as a sector, as we flagged off auto, infra, and the Nifty Bank Index as well gained about 0.5%. And it's interesting, Naresh, as well, because we're talking about that outperformance within the entire banking space, the fact that you did see a nice 2% gain so far in the month gone by. What's the outlook? Which would be some of your top bets within the private banking space?
So in terms of banking, we are looking at a period where we'll see selective moves, wherein one by one some will do well, some will say pause. But overall, we are not starting a momentum move across the board. So the stocks which I would be watching out would be ICICI Bank. That is one, because that has corrected decently and now has started making a base. So corrected from 960 down to almost 800 to 840. Over the last, say, 2 months, it has consolidated between 840 to 880. This is a stock which could go back to 930 to 960 levels. So first, the top pick in the large cap banking space would be ICICI Bank, which I expect to do well in the near term. The next would be watching out for IndusInd Bank, purely because yesterday was a strong move. And this has been structurally consolidating for a really long time. The stock is still below the pre-COVID prices. So this is where the next leg of catch-up could come in. In the small cap, it continues to be IDFC First Bank, which has seen a decent correction recently. That looks an interesting buy. And a risky one would be RBL Bank.
Right. Sanjeev, wanted to understand how you are viewing sugar. I mean, these stocks from the COVID lows, of course, have seen a, rank out performance, but wanted to know whether the story is intact. And for those who've missed the bus, can they still hop on? I mean, look at the move that you had, for instance, on a Balrampur Chini yesterday.
Sanjeev? So, Aisha, the cyclicality of them is played out well. And I think that there is a seasonal effect. We know that some of the holidays, the festival season, plus globally, there has been a little bit of weather inclements in places where sugar's output was strong. And I think India has been one of the outperformers. I continue to think Balrampur Chini, EID Parry and DCM Shriram are outperformers. But, here I would be on a commodities play. I would like some of the metals. I think this is the time to put your money, because if the dollar weakness is played out, steel prices are headed higher. So I would be more bullish on the commodity side rather than the soft commodity side. I think they have played out well. There is a seasonal effect, and these stocks have already run up a lot. But metals is where I would be very, very bullish.
Within metals, then, Sanjeev, if one had to get a little bit specific, is it that you would advise allocating funds?
So Aisha, I'll give you 3-4 names. Awan. First would be Jindal Steel. I think Jindal Steel, given its integrated play, the return on debt, they are now on return on equity the best ever in their history. So Jindal Steel around this 565, 570 is giving an excellent entry point. Chola Finance, which is the largest second-hand play on used autos, and you know that their franchise has done brilliantly. I would rather say replace Shriram Transport with Chola Finance. That is a stock which can go into 4 figures. Third would be to play the banking side, which would be through HDFC. HDFC, the parent, is seeing the highest mortgage yields ever, and you know they just raised some debt, which means their return on equity on an enlarged capital on debt servicing would be very, very strong. So that's one of the pedigree stocks. Tech Mahindra is my top pick in the IT. Like I told you, I think they are going to outperform all the large caps, and that is a very, very sweet spot they are in. And lastly would be IGL. Now, IGL is a dark horse because gas utilities are doing well, and you've seen recently the re-rating of MGL, IGL. So I think all these 5, if you put together, you will be in a sweet basket in this month and the next.
Interesting ideas coming in there, and quite a few from Sanjeev Bhasin. Kunal, what are you making of the charts in metal? I remember talking about Tata Steel yesterday, where you said the chart's not looking all that convincing right now. Any other than Tata Steel, where you think there is a trading opportunity?
So I think Hindalco and JSPL are the top 2 candidates in the mid cap or the high beta segment, I would say, from the metal pack. JSW Steel, the stock has been doing exceptionally well. So we don't talk of the stock in the same breath, but then it's been more of a consistent stock right from the 2020 lows as well as even earlier than that, where the stock recovered quite strongly. It managed to withstand a lot of the volatility, even at a point, I think, where 2022, when the metal stocks made a new high for themselves in the first couple of months of 2022 and then went into a sharp correction of more than 50%, JSW Steel managed to withstand major part of the corrections, and the volatility was not very, very high for the stock price. And even in the last couple of months, the stock has managed to show a lot of strength for itself. So that's a stock on the more formidable large cap names, which also looks attractive. So in case of JSW Steel corrects and say comes back towards 640, 625 mark, that's a very good zone to try and buy the stock or accumulate. From the high beta space, as I mentioned, Hindalco sub 400 levels, JSPL just around that 550 odd mark. Those could be very classical, rather classical levels to buy the stock, especially on dips. And we've seen this, for the metal pack, that whenever there is a sharp correction, the counter action for these stocks is also very, very strong and almost like a V-shaped recovery. So whether it was from 2022 lows or 2020 lows for themselves, the recovery for these stocks is very, very sharp. So it's always better to try and buy these stocks at a point where the correction is very sharp and the indicators are oversold.
All right. Meantime, Naresh, let's get in your take because you continue to remain fairly bullish on the entire PSC space. Apart from banks and the likes of ONGC, is there anything else that's catching your eye?
So the whole PSC space looks interesting. So the top weights continue to be Power Grid, NTPC, Bharat Electronics, ONGC. These are the names which continue to look very, very interesting. So if you look at the CPSE chart, it tells you a different story with what is happening with the other indices. Now, there are 2 ways to look at it. One is you look at the normal chart and then you look at the dividend adjusted charts. When you look at the dividend adjusted charts, a lot of CPSE stocks, the PSE stocks, have actually hit new all-time highs. So whether it's a small one like PFC at an all-time high, or say a percentage point away NTPC, say 3-4% away from an all-time high is Power Grid. So all these names are now starting a major move. Then we look at the Nifty CPSE index, this had last seen a major move in 2014, say around that 2800 mark, and now we are above those levels, 2800 to 3000 mark, which was hit in 2017 as well. So we are looking at a 8 to 9 year breakout on the whole CPSE index. So I would expect this re-rating to continue for the whole PSE stocks. So the same way we saw PSU banks get re-rated, this could be a time where PSE stocks could get re-rated. And a lot of these stocks are very low beta in nature. So they did not see a sharp fall. So Power Grid NTPC over the last 1 month in the whole correction did not fall and recovered very quickly. So remain bullish on the whole pack. So one could bet on Power Grid, NTPC, then ONGC, and Bharat Electronics is the one which I expect the maximum return from here on in terms of risk to reward, because that is a stock which did not see a big run up in the defense rally and now has consolidated for the last few months. So BL is a fresh bet and continue to be bullish on the rest of the names.
Okay, that's the view coming in on some of those PSU stocks. And Sanjeev, top mid-cap ideas?
So I'll leave you with that idea which can double in this year. It's called SW Solar. I've been advocating that from 275, 280 level. It's at 310. They have an order book of 4 gigabytes till now, and in the next 3 months they will get 32 gigabytes, which means 24 external and 8 internal. Reliance chairman has already committed in UP of 20 gigabytes, which means that this solar panel play is going to be a dark horse. It was originally with Shahpurji Palonji. Reliance Energy has bought a 40% stake. The balance sheet is clean. And if you are looking at the next 2 years on green and hydro and clean energy, this is the cheapest solar panel maker in the world. And I think their MEP, that is maintenance, electrical and plumbing business, is doing extremely well. So look at this dark horse, which can be a doubler from here. That would be my top mid-cap pick.
We leave it at that, Sanjeev, and always great to have you on the show. Quite a few ideas coming in from Sanjeev Bhasin. He's definitely betting big on metals. Sterling and Wilson is a stock that he's liked for a while now, and that continues. He continues to be bullish on that as well as HDFC. But on your screens right now, Prime Minister Narendra Modi is currently in Gujarat, remember? And he's got the Australian Prime Minister as well visiting. He's arrived at the stadium, which is, Prime Minister Modi Gujarat Stadium, it's called. And, this is to witness the 4th test between India and Australia with the Australian Prime Minister as well, Anthony Albanese, who's also in attendance. You can see live visuals currently coming in from there. Okay, let's move on and let's talk about some of the other buzzing stocks then in trade. And of course, we've talked about how Balrampur Chini was surely one. By the way, we're going to be chatting with the management as well in the due course of the show. So be sure to stay tuned. IndusInd Bank shot up very, very smartly in trade. Kunal, this is a long-term bet from you, right? IndusInd Bank?
Yes.
Yeah. What next on the charts after this big spurt and 8% move that we've seen in just the last 5 days?
So, there was something which was brewing to the stock price, because after the stupendous run for the stock from those 750 levels mid of 2022 towards a point when the stock had hit back 1260, 1280 levels, when it took a lot of time to try and break past about the levels, failed to cross over those levels, then corrected back towards 1000 odd mark, and now the stock has gone to a recovery phase for itself yet again. So when we look at the entire picture, it indicates that the stock has gone through a big breakout, a retest of a major resistance, and then scaling down, trying to retrace back towards the mean reversion, then coming back strongly. So that's a very good sign for a stock like IndusInd Bank. So the classical rally retracements as well as a time-wise consolidation, all of that is over for the stock price. Now, based on the trigger yesterday for the stock price as well as the momentum which came back into the stock, I would believe that this time there could be a high possibility that this 1260 mark, where the stock took a pause in 2022 second half, that should be taken out in this phase of the rally. May not be immediate, but possibly in the next 3 to 4 weeks, I think a retest of that 1260 mark could probably happen for IndusInd Bank, and that could lead to a big breakout for the stock. So maintain that bullish stance and expecting the stock to head towards 1250, possibly in the next 1 to 2 months.
Okay, meantime, some of those stocks as well that did manage to see some high delivery in yesterday's trading session on the upside included, apart from the sugar basket, there was a PNB Housing, a KRBL that was pretty active, as well as a TCNS clothing. Wondering, Naresh, if you've tracked any of these charts?
So, it has been more of a single day move in TCNS clothing. So, would not look into it, but yes, a base has formed. A rather deep correction happened in a lot of these names. There were a lot of expectations built in. So the correction is over, I think, in the near term, and a slow and steady consolidation. But one would have to be a little patient here for the recovery to play out.
talking about mid and small caps, Naresh, what about your mid cap ideas?
So that would be a buy on Indian Energy Exchange, again continuing the stance on the stock. If you look at the stock looks interesting from the perspective that after breaking out about 135, 140, has slowly and steadily made a higher top and a higher bottom formation. And it's corrected very sharply from the highs. So down almost 45 to 50% from the top. And now a base has been built. A sideways consolidation is over. And now we're getting into the momentum leg. I expect it to eventually go towards 170 to 200 mark. Yesterday, the stock came very close to the recent swing highs. And this was the high made in November, December. And a triple bottom base done around 125 to 130. Strong base formation. And this is a trend which could even continue much longer. Risk reward still looks very interesting. So a buy with a stop loss at 144 and a target price of 170.
Right. Kunal, what's on your mid-cap radar? IEX again?
No, it's Voltas, and I think very interesting charts again for Voltas. Two hammer patterns being formed, and in fact, the stock has this tendency of, at least over the last 1 month from the Feb lows of 740, that whenever the stock has formed a bullish hammer pattern, it's risen 3 days consecutively to a magnitude of at least 4 to 5%. So I would expect something similar happening for Voltas. Again, yesterday the stock formed a bullish hammer pattern, closed almost at the high point of the day. So would suggest a buy 940 as an immediate target, stop loss at 900.
All right, let's move right on then and get you some of the other top headlines that we're tracking. And lender to crypto industry. All right, in fact, let's begin by talking about the United Kingdom that has announced a new law. This is to crack down on illegal migrants. In fact, as per that law, anyone entering Britain illegally will be detained and swiftly removed to their own country. The Prime Minister, Rishi Sunak, has warned illegal immigrants entering Britain, saying that every illegal immigrant crossing the UK border will be deported and will not be able to stay in the country or claim asylum. Moving right on then, lender to the crypto industry, Silver Capital, has said that it's winding down operations and liquidating its bank. Silvergate is one of the 2 select banks for crypto companies. The cash-strapped crypto exchange FTX was a major Silvergate customer. Meantime, it's bad news for all the Game of Thrones and the Succession fans out there, as OTT major Disney Plus Hotstar has terminated its contract with HBO. This move comes after Disney's CEO Bob Iger announced cost-cutting measures to keep the company's restructuring in mind.
Well, the US Air Force C-17 aircraft carrying the NASA ISRO Synthetic Aperture Radar, or as we know as NISAR, makes a touchdown in Bangalore. In fact, the satellite marks the outcome of a collaboration between NASA as well as ISRO today. Also, Germany is reportedly considering banning select components from Chinese firms, including names like Huawei as well as ZTE under the 5G networks. In fact, a Chinese embassy spokesperson says that they are strongly dissatisfied with the said decision. If true, do remember Huawei has been accused by numerous governments of imposing a national security threat as well. Also, all eyes on the 2-day Bank of Japan monetary policy meeting. Investors are eyeing policy changes coupled with the Governor Kuroda's final policy surprise.
Lots lined up today on the show, but in the meantime, let's hear it out then from Rajiv Jain. He believes that India is well positioned to see stellar growth, but we need to be cautious about global equity markets. The main man at GQG Partners believes that the infra story in India looks very promising.
Global equity markets, I feel one has to be a little bit more cautious because interest rates have not fully, they've gone up quite a bit. But if inflation doesn't come down in a meaningful manner, then there's a possibility interest rates can still surprise on the upside. In fact, if you look at the consensus expectations on US interest rates, they have moved since February, by the way, almost 65, 70 base point in terms of where interest rates could end up by end of this year. So I think there's still some risk. the other part is, by the way, the geopolitical risk on a higher side. So I think we have to incorporate that, which, by the way, is another reason I actually like India, because it has less geopolitical risk. So the risk factors are a lot more favorable in India than most of the other places. If you look at the constant barrage of news coming out of Washington, D.C. against China in terms of sanction against companies, products, and so on and so forth, that is not a recipe for re-rating for China per se. So in general, I believe that the market return expectations should be on the lower side, not a higher side, because there's been a whole generation of investors who have basically seen nothing but low or declining rates, and that I think that movie is pretty much over.
In general, the view on India is that Indian economy is in a fine fettle, and we are very proud that we are one of the fastest growing economy in the world. Stability, I think, is something which is obvious both in terms of the corporate predictability and the political stability, something you refer to. But my question is that everybody has also raised concerns about valuations in India. The reverse of what I asked you. It's like saying that in India, the market is great, but you're buying gold at the price of diamond.
Yeah, look, I think valuation is always an approximation, first of all. So, but I think part of the India's issue is the index composition, and I'm not saying in a bad way, but just a fact. So, if you look at, for example, state-owned banks in India, well, they're selling similar values to state-owned banks in China. Look at energy companies in India, same in China. Tech companies, very similar in China. But the index composition in China is a lot more cyclical versus index composition in India, right? So if you look at pharma companies in China, they're actually a little bit more expensive. Some of the best staples in China are similar valuations in India. So I think when you adjust for that, the valuation gap is not really much different. Not to mention, if recently companies like Baba and Tencent, the government has taken golden share, right? Which basically means that, in my opinion, they are quasi-state-owned. The problem is the state-owned companies in China trade at 5 times earnings. But these private sector companies, which in my opinion are trending towards becoming state-owned, they're 25 to 30 times earnings. So when you adjust for
all right, let's get a move on then and find out what the index calls are from our chartists this morning, given the fact that we're looking at the pre-open ticks, which are absolutely flat, but around the 17,700 mark. There you have it. After a long time, we're getting a consensus call on the index. Hold, that's the unanimous view coming in from 3 of our experts. This after the markets, global markets have digested that Fed commentary, the fact that Asia was looking a bit jittery. The consensus call on the market moodometer is hold. What about the Nifty Bank Index? We were just talking about that kind of outperformance. While it's not a consensus call, at least 2 of our experts believe that it's a hold. Kunal, though, continues to remain firm that it's a no trade on the Nifty Bank Index this morning. But of course, majority wins, and that therefore the market moodometer's Nifty Bank consensus call is hold.
Kunal, why hold? Why not a buy? Because things are falling in the slot very nicely now.
He's a no trade.
No trade. I mean, just no trade or hold.
So for Bank Nifty, yesterday and day before, in fact on Monday, we specifically had a book profit call on Bank Nifty when we were at 41,700 on the Bank Nifty, because my sense is that the Bank Nifty is going to a saturated zone over here. So it doesn't make sense to buy the index at a point where you know that there's going to be a fatigue or overbought nature of indicators. It always makes sense to try and use intraday dips or corrections. The only concern is that the last 2 days, there has not been any major kind of an intraday dip. Even like for a day yesterday, I think the Bank Nifty was down just 150 or 200 watt points, which is hardly any major room to initiate any fresh buys. Because if you're looking at an upside of 400, 500 points, you need a protection of at least 200 to 50 points. But if the downside is also 400 odd points, then the risk reward is 1:1. That's the only reason why I would suggest no trade for Bank Nifty. But in case if the Bank Nifty dips down, say 200 to 50 points on an intraday basis, then I think it opens up a good door to try and go for a contra buy.
Naresh, again the same point. I mean, if things are coming back, at least for the broader market, if Adani group of stocks have stabilized, if a stock like IndusInd and SBI are looking strong, why should one now not chase the market rather than just holding on to long positions?
So the view is the index cannot be chased purely because index is a mixture of a lot of stocks and we are not seeing strong trends. So stock specific chasing is what one should be focused on. The problem is if you look at the Bank Nifty, HDFC Bank is not going anywhere. That removes out 25% of the Bank Nifty. And then Kotak Mahindra Bank is not doing any trends. So that becomes a problem. So if you're trading an index and 40% of the index is not moving, you're better off focusing on the rest of the 60% of the stocks and going stock specific. And that's the problem similarly with the Nifty as well. So if you pull up HDFC and Reliance Industries, they've not done anything. IT is now getting into a sideways slumber. So the fact is right now, stocks are looking more interesting than index. And maybe once we start crossing 18,000, that would change. So once we've initiated a buy around 17,400, 500, now you just can trail onto the position or at closer to 17,900 is the price point at 7,900, 18,000. But I would like to book profits rather than chase the current move.
Right, couple of other stocks which are going to be in focus, and I'll specifically look out for what Adani Transmission as well as Adani Green do, even though all of the Adani Group names did see a marked recovery in yesterday's session. But remember, for transmission, promoters created a pledge on about 0.7% equity in favor of SBI Cap Trustee. And for Adani Green, it's almost to the tune of about 1% although these stocks are still holding up and still gapped up by about almost 5% as we speak right now. Data patterns, we just told you as to how the QIP of about 500 crore rupees got launched. The floor price has been set at 1284 rupees per share. So that's going to be another stock to look out for as well. And MGL is going to host a call on the Unison Enviro acquisition that they made, after which the stock did see a fair amount of run-up as well. Bharat Forge too is the other stock in focus. They've announced their e-bike manufacturing facility at MIDC in Chakan in Pune. So that's another stock which is going to be in focus. And Phoenix Mills as well, wherein the same store's consumption data has come in higher by a good 20% in the month of February. So that's another stock that we're going to be looking out for. There's, of course, Kirloskar Oil as well. We reported exclusively to you just yesterday that the Kulkarni family and the promoter group has sold about 13%, and mutual funds have been buyers into yesterday's block. And Sequent as well, Sequent Scientific that is, which has terminated an acquisition of one of the pharma companies, which was announced on November 7th. So rollback coming in there. That stock also holding out well. Gokuldas Exports, Pankaj just reported that the promoter, that's Clearwealth Consultancy, is looking to sell about almost 8.25% stake via block deals. So that's going to be another stock which is going to be in focus this morning, Nikunj.
40 seconds to go. And it could be a okay day of trade, and frankly 17,700 now, is that the new normal? If that is the new normal, then are we looking at more and more outperformance which could come, let's say, in sectors like sugar, maybe mid-cap engineering? Are we at that turn where the trader now wants to come back? Are we at that turn where it is now back to taking risk? Was the rally in sugar just a one-day wonder, or now we could be in for a decisive move in terms of the risk appetite? The problem with this market is that the risk appetite is dull, the participation is low, the market action is not that strong and charged up in either direction. So I'll just wait for the screen to update for the first rates to start kicking in, and the first rates actually will start kicking in any second now. You got Nifty, which is off to a flat start. You've got Bank Nifty, which is off to a flat start with a negative price. I'll just use my screen for reference purpose, just to see where the big changes are there in terms of the price action. In the volume action now, you got, I think there is a large block deal in Home First Finance. We're telling you about Gokuldas Exports, that block deal is done. So two blocks, Home First Finance and Gokuldas Exports, they both are done. You got Yes Bank, which is off to a flat start, but sugar stocks are really, rocketing up. Bajaj Hindustan, the company ran into rough weather with the lenders, and when the rally in sugar is strong, Bajaj Hindustan is also jumping on the bandwagon. 7% higher for Bajaj Hindustan. Reliance Power is looking strong, PC Jeweler is looking strong, Adani Wilmar is up, NCC is up. So while you can look at the index and say dhila hai, nothing happening, no large price action, but the breadth is charged up. Ranked mid-cap stocks which are patronized by dealers, by traders, that's looking strong. And if I just have to hunt for the price action purely based on the first rates, two block deals, Reliance is looking strong in terms of volume action. And then what else is catching my attention? I think it's Shriram Finance, where the volumes are looking strong again. Aisha?
Yeah, those are a couple of stocks which are in focus. Shriram Finance, Kirloskar Oil, like we just told you, wherein the Kulkarni family and the promoter group has sold 13%. Mutual funds are said to have been buyers. That stock is holding up in the green as we speak right now. And Shriram Finance as well, wherein PE investor Apex has sold, and Capital International, which is a large buyer in block deals. So these are a couple of stocks which are in focus. Let's see what Shoppers Stop also is up to. Considering the same store consumption has been pretty high, and now they're going to be in a strategic distribution partnership with Japanese company Shiseido as well. So that's another stock in focus. Bharat Forge too, which has announced their e-bike manufacturing facility at Chakan in Pune. That's another stock in focus. Data Patterns, wherein the QIP, as we understand, has opened. That stock holding up 0.6%. And then Gokuldas Exports as well, wherein the promoter Clear Wealth Consultancy is looking to sell 8.25% stake via block deals. That's another stock in focus as well. Let's see whether the sugar and defense trade still is continuing or not. Remember, yesterday both HAL and Balrampur Chini were big winners in trade. Balrampur Chini has settled in flat right now, Bajaj Hindustan looking up, and let's just get the entire pack going as well. I think it's a very sporadic move today, but Hindustan Aeronautics, after that 5.5% jump, let's see what that stock is up to. And then IndusInd Bank as well, considering the big breakout on that stock yesterday and the fact that it held out by nearly 4.5% today, it's a lot tempered. But Kunal, it's such a flat start. Where does it go next?
Yeah, I think it's as per expectations, because I frankly expected that the markets would probably remain more flattish. The volatility index as well has gone down to sub the 30 odd mark, so that again would probably put the indices into a bit of a tight range. The stock which I would look to trade on the opening would be IndusInd Bank, specifically after yesterday's price action move, where the stock came back about 1170 mark. So I think any 10-20 rupee dip, 1150-60 mark, I think is a very good zone to try and buy the stock.
That's IndusInd Bank for you, getting Kunal's stamp of approval. Meanwhile, just keep an eye out on the screen. We've been talking about a whole host of block deals as well that are taking place, the details of which are on your screen. We got you that exclusive as well of the Gokuldas Export block deal, and there has been a 10% change of equity. Meantime, Naresh, let's get in your first trade.
So that's a buy on Indian Energy Exchange. The stock has given a breakout and continues to do so. Today also closing above yesterday's high, that 149 mark. So expecting this to continue slowly towards 170.
Okay.